with oil now at an 11-month high. Crude futures pushing towards $73 a barrel today, moving closer to an all-time high, which was reached last August, remember, about $78 a barrel. Traders attributing the move to mounting tensions with Iran, with the U.S. sending a third aircraft carrier to waters near Iran. Crude oil is up about 18% in 2007. Meantime, a new report says global demand for oil will rise faster than expected and outpace supply. The International Energy Agency saying demand will rise by 2.2% a year over the next 5 years. While some say the report is alarmist, others say the crude realities are even more severe. Joining me now, Steve Andrews. He's co-founder of the Association for the Study of Peak Oil and Gas, or ASPO, and CNBC contributor John Kilduff, energy analyst with Man Financial. Nice to have you with us, gentlemen. Welcome to the program.
Thank you.
Let's start looking at this report. For one, the fact that we are likely to see demand rise faster than supply. Do you agree with that?
I would, yes. At some point, going into the future, we're having demand come up pretty quickly in Asia. We're having depletion in the old fields, the North, say the North Sea, and we're having just trouble getting large projects on stream on time, some delays. So demand, depletion, and delays are kind of the 3D problem here, and they're hurting.
John?
Well, I think that in terms of talking about the IEA report that you're referencing, that's something that's talking about going out 5 years, out to 2012. I think over that time period to assume that there won't be some business cycle activity, and by that I mean some economic slowdowns, possibly even a recession during that time, that 5-year period, if not one or two, that will allow the oil infrastructure to catch up. I think to that extent the report is sort of pouring a little bit of fuel on the fire that we are experiencing right now. We have been caught short right now in terms of what we've seen coming out of China in terms of demand and the huge refinery problems that we've had for this entire year. But there's a lot of oil coming online in my view, and I don't necessarily subscribe to the fact that we're going to be peaking on oil production out of the ground anytime soon. Yeah,
but I mean, these are long-term projects, right, John? I mean, even if we were to start a project today as far as producing more refineries, drilling for more oil, it may still not make that 5-year plan. I mean, you're talking 5, 10, 20-year projects.
Well, I am, Maria, but we're already seeing Saudi Arabia, for example, get from 8.5 million barrels a day to 10 million barrels a day, likely to get to 12 million barrels per day within this 5 years. We're also seeing, despite some of the political problems, more production out of Russia, although maybe not at the rate we had hoped. And there was a huge find in the Gulf of Mexico and more rigs popping up, really literally all over the world right now to get more oil to the market to capture not only $70 oil today, but what the forward curve is paying for that oil as we look out.
Steve, tell me really where this is coming from. I mean, China is trying to do deals with Europe, right? You know, you've got some of the big demand the big demand out there trying to do deals away from the United States with Russia as well. How do you see this playing out from a political standpoint and a geopolitical standpoint?
Well, demand is the story in China, and elsewhere around the world, though, you're seeing Mexico, say, going into slight depletion there, and their internal consumption is increasing, so you'll see fewer exports from Mexico, and that's also been the case from the UK. They used to be an exporter, now they're an importer.
Well, what about Canada? Canada's pretty oil rich. That's one of the biggest producers.
Canada is. Their conventional oil is in decline. Their oil sands, of course, are booming, but there's a limit there, and the constraints are things like energy to do the melting of the tar out of the sands. You need a lot of natural gas to do that. You need a lot of water. You need a lot of labor. You need a lot of materials. It's not going to come up quickly. In Canada, they talk about the size of the tank up there, but it's the size of the tap, and we can't turn it on fast there. So there are a lot of constraints in the world system here on the supply side, and increasingly, well, the IEA woke up and sort of smelled the Starbucks here. They're the first ones to really acknowledge that we may have a serious problem at the government think tank level, and I wish others would look closely at what they've said. I think that Russia is a wild card here, and Venezuela. Don't forget they've been kicking out ExxonMobil and others, ConocoPhillips out of
right.
Venezuela. and Russia, the Sakhalin II slowdowns, the kicking shell out of majority ownership to
Absolutely.
minority. So there are a lot of things going in the slowdown direction that don't give me confidence that we have all the projects we need online, that we'll have them. And the IEA recognizes that, and I applaud them for that. All
right, we will leave it there. We will talk with you soon about this story, which, of course, is not going away any